Hey, everybody. So today we have the pleasure of speaking with real estate investor, agent, advisor, and expert in creative finance, raising private capital, and surfing, David Gulick.
Very
Thank you,
cool.
thank you.
That's gotta be one of our best intros ever. Like, no, I mean, the surfing definitely is the icing on the cake
I'll
on
be
that.
honest, I didn't know what to expect from that, so I think that sums it up pretty well. I'm happy.
It's so funny, we're both very new at doing this, and so like it's kind of hard to do an introduction. But Keith, I think you nailed it.
Cool,
I
cool.
I agree. You know what so like the only my exposure to podcasts for the most part is what's a Smartless, and those guys have set the bar so damn high for intros.
Which I
Um,
I actually am not familiar with that one, so I'll have to check
It's
it out.
Jason Bateman, Will Arnett, and
Oh yeah,
I'm drawing blanks on the third guy, but like, how could you not love those two names already? They're just so
yeah.
entertaining.
Gonna put our introductions to shame, Keith.
I don't know if we're going to be as entertaining, but hopefully we'll have a good chat and
That'd
drop
be
some
great.
wisdom.
For sure, for sure. Well, thanks again, Dave, for coming on. I think today for the audience, what we're really looking to kind of have a focus on is real estate, but with a microscope on the lending portion of real estate. I think that this is honestly one of the most unknown parts. There's so many things that can be done and ways to kind of navigate that particular area that honestly am not even close to well versed within, but I've heard some things through the grapevine, and so I'm really excited to have Dave on because I know he knows quite a bit about it. So we'll be picking his brain here now. And so I will go ahead and kick us off. And Dave, if you can just kind of give us a little bit of a background on lending in general within real estate. So I think a good place to start would just be what is a private money lender and what role does that have within the real estate investing space?
Sure. I appreciate all the credit you're giving me. I'm still like I always like to say this game is kind of just a hierarchy of problems, and I'm still just a guy who's still just figuring it out. I'm just like a few problems ahead of the next guy. So by no means would I call myself an expert in this. I'm just at the point in the journey where um, working with private lenders is something that's covers a large portion of my day. Let's just
Mm.
call it that way. And it's arguably the biggest gap in our business. You hit a point where you're trying to balance your deal flow with the capital, or whatever you need to take down those deals. So that's where I'm at in the journey. So what is a PML? An individual who has capital, either liquid or in an investment account or in equity in an asset like their home. Um, and that's it. I mean, we basically just show them how to access capital that they know or don't know they have. Example of equity in their home, or a retirement account through a W-2 type job, that's just sitting there, and they didn't know they had the ability to take control of it and put it into something that maybe gives them a higher return than they're getting right now.
Gotcha. That's yeah, there's so many different avenues there. Those are some good ones that you've named already. And I think that's a pretty good summary of it. One other good question that kind of I would think would be good to get ahead of early is
Yeah.
what is a private money partner and how does that differ in from a private money lender?
Yep. So again, on definitions, like, chime in on anything that I miss, because again, I'm not the expert here. So the difference in my brain between a lender and a partner: lender, we're basically agreeing upon a return that they get, and they're invisible. They're just the bank, right? Like, if I were to go get a mortgage, like, the bank and I don't communicate. As long as the bank gets the return, they're good. So that's a private money lender. In this case, it's a private individual that I build a relationship with. Primer, Private money partner, on the other side, um, in my opinion, the difference is going to be a level of control. How much they want to be involved in the deal, in decision making and stuff like that. As far as returns, they're probably going to expect more of a partner type return. So the numbers start going up. as opposed to just like as a private money lender, you agree to an annualized return, a flat rate return, um, a simple interest return. With a private money partner, you open up, are there equity positions involved? Which also opens up, hey, if the deal loses money, now you're a partner. So you're taking on extra risk. Whereas the lender, you don't have I'm not going to say you don't have the same risk, but the risk is different.
Yeah. Yeah, that makes total sense. In my brain, I always, and again, I don't even have really experience in this realm. It's just pure knowledge and stuff that I've like read and heard. But in my brain, one of the things that I thought qualified a private money partner scenario is more so when there's kind of like a joint venture that exists within the transaction. So, whether that be, well, I don't even want to say whether that be. Really, the only way that I know that that can take place is when two people or more open up an LLC together for that particular transaction. So, is it safe to say, or I guess it's not safe to say that opening up an LLC is not one of the requirements for a private money partner
So,
scenario
so,
to
so
exist?
again, right? My business model is such, and our needs, and like the way that we kind of like to do things is that we prefer working with private money lenders.
Mm.
It's a control thing, right? So, like, what do I bring to the table? What do they bring to the table? I bring to the table my experience as an operator, our ability to underwrite a deal and assess value, our ability to manage a team and construction and bring something to market on budget and in a time frame that makes sense. Um, our relationships. Um, that's what essentially we bring. Um, Here's the beauty of the private money world in general. There's no rules for essentially the rules are whatever both parties or all parties can agree upon. So like there's no one size fits all for like private money always looks like this. It doesn't always look the same. It looks like whatever the parties involved can agree upon. Same thing with private money partners. It looks like whatever all the parties involved can agree upon. Um, I don't think any two private money lenders will necessarily ever look the same. There may be some overlap. I mean, essentially, I know that we'll hit a point in our business where the money will, for lack of a better term, be chasing me. Um, because I'll just be visible enough that like my natural network will be like, oh wow, we didn't know you were doing that. Can we give you money and can you give us returns like that? In which case, I'll kind of set the terms. I'll be like, well, sure, here's what we pay. And if someone's like, well, no, I want more, I'll be like, well, I already have money that I can pay this. So that's like, take it or leave it. Um, so like there will be some uniformity at some point, but like when you're first starting out, you're kind of like, oh, I'm overpaying for that, but I'm okay because what am I going to do? Not do the deal? As long as the deal's still profitable, you may make decisions earlier on in your career that you wouldn't make later.
Hmm. So I want to jump in now, guys. I'm drinking out of the fire hose here, and so I want to
Okay.
see if I'm understanding this right. So, David, your role is a private money partner, and you work with private money lenders, which can be any individual that has liquid cash or or assets that they can then work with you on to identify places and people and things to invest the money into, right? And you kind of help arrange and make those deals happen. Am I understanding that correctly?
So I wouldn't call the only thing from a term standpoint, I wouldn't call myself a private money partner. I'm
Okay,
essentially my business partner and I are the principals.
the
We're
principles.
borrowing from, we're working with a private money lender or a private money partner, but we're the
Gotcha. Okay,
principals who identify the opportunity, underwrite it, bring it to fruition, and
very
then
cool.
we go find capital to close on it and see it through.
That's very cool. Okay, so I'm understanding it then. So a private money partner and a private money lender, they're kind of on one side of the fence, and then on the other side, you have you and your partner as the principal, and then you guys go explore. Okay, cool, very exciting. So what kind of? No, it sounds like real estate is probably one of the kind of core areas that you look for investment opportunities. Do you explore any other areas, or what's kind of that look like?
That's it. So here's the thing that I found: being successful in anything is ridiculously boring. Same goes for real estate. And why most people struggle in real estate is there's too many ways to be successful. That's straight out of like, what our common mentor, Pace Morby's mouth. He's like, the biggest problem with real estate is there's too many ways to be successful in real estate. So it's easy for people to jump around. Knowing that, we just found our lane. And, in my opinion, what you do is you stabilize one thing and then you start bolting on. But like, so in our business, we deal with only median priced single family, 3-bedroom plus homes, essentially in counties where there's, a low days on market, there's a certain population density, a certain amount of transactions happening. And we only touch essentially cosmetic renos that we can buy at, X percentage of ARV. They give us a minimum return of this, as far as like a dollar amount or a minimum percentage return. Because at the end of the day, if I'm borrowing someone's money, I want to sleep at night. So I'll only put someone else's money into a deal where I'm like, yeah, I'd do that deal. Like that's a good deal.
I'd make that deal.
But
Gotcha. Cool.
essentially, I would never use my own money in the deal, because if I were doing that, then I cap out. Because what happens when all my money's in a deal? And I have lent on our own deals. And then what happens is you set bad habits, because now another deal comes up and you've stopped raising private capital because you're like, oh, I'm just going to put my money in this one. Now all of a sudden you don't have capital. So like the balance is you're forever raising capital, because you don't know, like, let's just say I have 4 prime lenders. Between them, it's multiple 7 figures. Our average deal size, call it $200,000. Problem is, they also lend to 3 other versions of me. So their capital may not always be liquid when I need it. So like I arguably have to have 4 times more capital than I need at any given time, because I don't know when it's going to be liquid and I don't know when my deals are going to come. In time, I get some level of predictability, but that's always the fun balance.
Yeah, that is interesting. It's I can't even imagine how close you have to monitor these things. You're dealing obviously with large amounts of money and investments in these properties. That was one of the questions that I had too. So I like the lane that you've described. What does the timeline look like when you've found a property that you're like, yep, this is one I can sleep at night on if I put my money into it? You go to your partners and secure funding for it. What does the timeline look like from working with the partners, securing the funding, getting the property, and then making an exit for a profit? What does that timeline look like?
Yeah, so let's just assume it's a lender that we've already built the relationship. They said, yes, Dave, I trust you. I want to give you money. Here's how much I have. Give me your next deal that you like. I'd say our goal is to be close to close, in and out in under 4 weeks.
Wow, that fast. That is
Yeah.
so fast.
So I mean, again, how do I sleep at night because of that? If I'm only doing cosmetic reno, I want to be in and out of my renovation in under 4 weeks. I reverse engineer my deal where I'm leveraging realtors as a local expert. A lot of people in the investment world talk shit on realtors. I love realtors because
Okay, all right.
I know how to use them. I could go into anywhere in the country, go find the local realtor who knows everyone's business, who's sold thousands of homes there, and we can underwrite a deal, and then they're basically just checking my math.
Mm.
And they know that they have the relationship with the buyers. So like, what's the best way to do anything? Have it pre-sold. So I hit the right realtor. I've had so far 3 realtors buy our deals from us. I called them up. They were going to list it. They ended up buying it. One of them bought it as their primary residence. Another one bought it. We ended up assigning it to them instead. It just timing changed. And the third one, same thing, primary residence. It's
Interesting.
so like I go into a deal with a realtor saying, hey, give me the price that this thing's going to sell in the first week it goes on market. So I'm being conservative there. And then I have them go in with their contractor, because they're my eyeballs. I haven't physically set foot on this property. So when they go in during my inspection period, I want 2 things from them. What's the number you'd put on this that has it sold in a week? And what level of renovation do we need to do to get it there? And bring your contractor so I can have that number. Then I get to reverse engineer. Hey, did I lock this thing up right or not? Does it hit, my thresholds for where I'm comfortable in profit? And now the reason I'm protecting myself is in the median price point markets, they're almost recession proof. I'd say they're the most recession proof, because if I'm only in the project, I close it, I have a contractor in the next day, 4 weeks of reno, and then we're on market maybe 2 weeks. Say it takes me 6 weeks to bring it to market. There's, I don't want to say there's nothing that can happen, but chances are extremely slim that if I bought this thing at 60, 70 cents on the dollar, um, the median price point market is going to tank enough in that 6 week period before I list it, or interest rates are going to rise, or something is going to happen that's going to affect it that much to where I'm going to be negative on the deal.
So that's why you have to move quickly.
It's part of why we move quickly. It's part of why, yeah, I mean, I don't, it's just my business model, right? So like I stay in my lane. I know that like this model works. This model has worked for a while. It'll continue to work. If the economy changes, I just need to buy cheaper. Like but because we're doing this every day, I have my finger on the pulse of what's really happening.
That's some
Yeah.
valuable insight to have,
Yeah, I
anything
mean,
like that.
so if you were to ask me a year ago, I would have thought I knew everything about my business. I was like, man, we know more than we're the smartest guys on the planet, right? I've since hired a business coach, because what I realized is we knew real estate really, really, really well. There were a lot of things I didn't know about being a business owner. So I had to graduate to the next level of problems to learn how to manage people, how to identify talent, how to like. So now I could say, I could look at my business. I can get a report on a Monday, and I know my cost per contract. I know on average how many days from when marketing went out to we get a contract. I know how many days it takes from that contract signed to the contract closed. I know what that contract cost me. I know my average profit per deal. So now I can make important financial decisions around all of this.
Mm-hmm.
I know the big thing is my cash conversion cycle. This is the biggest number that nobody talks about. I
I
probably
think
went way off topic from
no, you didn't at
No,
all. You didn't
that
at
was.
all. You didn't at all. I think there's a
I was
lot.
just.
There's
We didn't
obviously
want
a
to
lot of
say
ground to cover.
anything.
As you can tell, I enjoy this stuff. I do it all day, every day.
I didn't want to interrupt that at all, so I just stayed
That was
quiet,
good.
extra
That was
long.
cool.
Let me
I
shut
tell
up
you,
for a minute now.
no, I really do think that's neat, especially what you described. You have a pulse on probably one of the most important, economies of this country, and that's real estate. How homes are moving, how homes are being sold, relationships with realtors. I think that that's a really unique, vantage point that you have, and that you've set yourself up to understand just because of the deals and things that you're monitoring for. So that's really neat.
And it's the
One of
benefit in being in a bit, I'm sorry, of a
Go
big
ahead.
community too, because I'm taking all of the information, not just our experience. We have this hive mind to go to and be like, hey, I'm experiencing this. Like, what are you guys seeing? Like there's no benefit in any of us gatekeeping information.
Hmm.
It's, there's
It's true.
life will always happen. What are we doing? How are we buying homes at discounts? We're solving people's problems. That's it. We will never compete with a realtor in buying a home. So like, it's an amazing community. We get to share information, and that helps.
I have a question. What's one of your favorite transactions or deals that you've ever like completed on? Like, what's one of the ones that come up to mind first when I say favorite?
We've had some hairy ones. So this was a fun one, actually. We I almost hate to say this because I feel like I'm like a bad guy in doing it, but like there was a time frame where hedge funds were buying up a lot of homes.
Oh yeah.
And we were guilty of selling to those hedge funds. We knew it wasn't going to last forever. They were just paying stupid money. And so at the time, I was running a team of, I think we had 7 virtual assistants. I was running, we basically would pull the hedge funds' exact buy boxes. So this is where everyone messed up. This is why in my brain, this is easy. Like find your buyer first, fill orders. It's
Could
no
you
like,
describe what a buy box is for Ben and everyone else?
yeah. So the buy box is exactly what you want. So like Ben, if you told me like, hey Dave, whether it's your own personal home that you want to live in, you're like, I want to live in this zip code because I like the school district. I don't want to live on these streets. I only need 3 bedrooms. I don't want it built before 2000 because I just don't want the headache of that. Um, I want it to be one story. I like a ranch. I'm going to get old there. I don't want to worry about stairs when I go. So like you give me certain criteria. And so I could go look at public data and I can pull data that matches your exact, what you want, your wish, your Christmas list of a house. Um, and then I market just to that. Why? Because it's more efficient than me just guessing. So what am I doing when I'm marketing? I'm just trying to get anyone to raise their hand and say, hey, yes, I do in fact want to sell my home.
Mm.
And when they raise their hand and say yes, then we're just having a conversation. I'm like, okay, well, what's that look like for you? Do you have a number in mind? If they do, okay, let's figure out if that number makes sense. Tell me a little bit about the condition of your home. Okay, based on the condition, I don't know. Would you agree it needs a kitchen updating? Okay, what do you think a kitchen updating costs? It needs okay, probably needs a bathroom. When did you do the roof last? I mean, and then we start whittling price down and stuff. But so getting back to the deal, we were just essentially bulk marketing to a couple counties that we knew our buyer. Doesn't matter who the buyer is. We knew exactly what our buyer wanted. So we were marketing to that data, and it was a large data set. Most of these people, because we were going so wide, so like in real estate, we're looking for problems to solve. So like we'll typically target specific lists, like a tax lien list, a divorce list, a foreclosure list, a probate list, whatever. We're looking for a problem to solve. But because we were just doing bulk, there were some people that had problems and some people that didn't. And so we got this guy. No one had marketed to him. We got a crazy discount on the house, almost too good to be true. We've definitely had sellers before where there's people out there that impersonate and scam, and we've come across all that. Luckily, we get title insurance, and all of that gets uncovered, before we can lose our money or our private lender's money. But this deal, it was the day of closing, and apparently the seller's like literally driving to the title company to sign documents, and his phone starts ringing off the hook. He calls us up freaking out. He's like, what the hell did you guys tell the whole world? Blah, 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 what's going on here? Turns out he was like, that's the day this guy was behind on payments. That's the day he popped up on the public list. So all of a
Oh,
sudden now he's on the pre-foreclosure list. This guy had no money. He was out of money, and it was like the day of closing was the last day that, like, boom, he popped up on the list. We made $106,000 on that deal. Guy wasn't on anyone's list. Completely
wow.
under the radar.
And
So
that's
that's just kind of like due diligence, being out there, early bird gets the worm kind of. You guys were on top of it.
It's a couple things. It's you can never put yourself in your seller's head. You don't know what's going on in their world.
Mhm.
It's yeah, I mean, it never came up in conversation. We've since changed our scripts and learned a lot of things from them, since then, that we try and uncover more in our initial conversations, because at some point you have this massive pipeline and you're constantly filtering, trying to whittle it down to figure out what's the best use of my time. If I need to predict, because now I'm running a company and I have expenses of, staff and marketing, all these things, where is my next deal most likely to come from? So, we've put SOPs in place around everything in our world now. But yeah, I mean, I know that was a really simple one. Like, I've had crazy ones with hair all over them. They come up all the time. But like, for some reason, that one just jumped out at me because it was like, sometimes you just get the layup. And it's not rare, but like, actually, we had one. It just came in Saturday. Same situation. We're doing a lot of inbound marketing now. That was when we were doing outbound. Takes a lot longer. This is inbound. This is people filling out a form online,
They're ready to move.
and they're contacting us. And a lot of times it's shit. It's people just thinking like they're going to get a price spit back out on an email, and they're not going to have to talk to a real human, and that price is going to be top dollar. You get a lot of that. But there's a saying that you can't say the wrong thing to the right person. And it was like, we joke that every other Monday is like this Monday the shit's hitting the fan, and we're like, you know, why are we doing this? And then the next Monday, all of a sudden, you're like sitting on top of the world. Well, this Monday we were sitting on top of the world, so next Monday
Okay.
gonna
Good
be
Monday. Good
is
Monday.
gonna be a mess. But it was one of those, like, the lead literally just came in, and it couldn't have been easier. Was like about to declare bankruptcy, like hadn't talked to any other investors, like had a low debt to, like, ARV ratio, a low interest rate. Like, we ended up giving her multiple offers, and she took the cash one, and like, couldn't have been easier. So, like, those are favorites too. But then we
Hmm.
get the ones, we had one the other day where turned out the son was, find out day of closing. Son was impersonating the father who was deceased for 5 years.
Oh,
Um,
wow.
and so the closing attorney got an anonymous call. Turns out this guy had four brothers and sisters. We think one of them found out he was trying to sell the house without telling them. And so, now that thing's going into probate, and it'll probably die because apparently there's a lien on the house that's bigger than our purchase price was.
Hmm.
Sheesh.
But every day's an adventure.
Wow. Wow.
One of the things I want to just kind of take a step back and hone in on for a minute is going back to, you mentioned, like, I hesitate to say this because kind of makes you seem like a bad guy. So one thing, like selling homes to hedge funds was one thing, and then the other thing that stood out to me was I I've had this conversation actually with a family member of mine, where in general, like the general thought is like, okay, buying a property, for example, from someone, and obviously buying it at a price that is good for you so that you can make a profit on it, is can oftentimes be frowned upon. I don't really understand why, but I think the argument is just like it's like somewhat predatory or something like that. But there's a really critical thing you mentioned there, where I think you said you made around $108,000 on a home that was in foreclosure, and no one else marketed to that guy. That guy, not like you buying his home when it was in foreclosure, like you saved him. You basically, I'm gonna imagine you probably put a little bit of money in his pocket, so that's something that wasn't gonna happen had it gone to foreclosure. And also, he's not having to live with 7 years of a foreclosure on his credit record. So those are like two huge benefits that you provided to him. And like you mentioned before, like you're solving people's problems. I think that that's something that, quite frankly, I think a lot of people might miss, and like they might see that as like, oh, you're just like marketing and doing your salesy stuff to try to get people to buy properties from people at a discounted price. But people put themselves in all kinds of crazy situations, and like there was literally, that's a perfect example of no one else being there to help him get something out of his home except for you.
Well, I think that goes back to what David also said is, no, you can't put yourself in the mind of the seller. Nobody knows really kind of what their situation looks like. I think if you
Yeah.
go in with the objective of I'm trying to solve problems, I'm trying to help somebody, because that's something else I think is I think the education and the understanding of the American consumer when it comes to selling their home or buying a home can be intimidating, especially if it's their first time that they're trying to cross this bridge. And I think the default answer that most people always think is, I'll just get a realtor, and a realtor will do everything for me. But it definitely feels like what David is doing is a solution to that, And I don't know, David, you were going to say something before I jumped in.
No, so I mean, there are three things that jumped out at me. Number one, about the predatory nature. We've grown to a point now, like, I wouldn't advise this for anyone brand new doing inbound leads, because it's the most expensive type of lead, and if you're not qualified to handle it, you're going to burn money really fast. But now that
Yeah.
we've graduated to that level, I'm never going to do anything else. These people are coming to me. And so what do we do? Our goal is to disqualify fast and figure out if there is an actual problem to solve. So, like, one of the first things we ask them is, you're going to get way more money just listing with a realtor. Why don't you go do that? And then they open up and they tell us their world.
Mm.
Now we know, okay, well, we just disqualified the most common way to sell your home. Let's see if we can help. And so there's nothing predatory about it. And, we're solving a problem. And so also, my personal story, and I don't hide this. I started investing in real estate back in my 20s. I'm 49 now. And my first
Jeez,
time
man,
around,
look good for 49.
I lost everything. Thank you. So I've had to declare bankruptcy, and I've had that on my record for 10 years. And I know what it cost me. It cost me owning my own home. I still don't own my own home. Um, and so being able to educate someone and keep them from having to go through what I went through, like that hits home, like that's an important thing. People, like, I didn't know what I didn't know at the time. And we talk to those people all the time. So like part of our job is educating people like, hey, here's your options. Like, we're not going to try and ram down your throat that we're the best one. Like, let's walk through what you're trying to accomplish here and let's see if we're the best one. And if we are, then we'll move forward. So
Totally. That's yeah, it's such an easy point for people to miss. And it's hard to get through the people who aren't really looking to know more about the space. So just wanted to kind of hone in on that. One other question that I have for you is, what are some ways to get in touch with folks to be able to do deals with them? So if like, what are some ways to find private money lenders, for example, or even private money partners?
yeah, so I mean, every book or class, or whatever I've always read says, start with your warm market. And it's true, right? Because a private money lender is relationship based. Essentially, you're betting on the deal, but you're betting on me. You're betting on, if the shit hits the fan and this deal goes sideways, how the hell am I going to handle it? Am I going to man up and give you your money back and a return? Or am I going to, ghost you and run away, and be like, sorry, you took a risk. So it is very relationship based. So I think in the beginning, it is natural to start with whatever your warm market looks like. It doesn't just mean friends and family. It means, anyone in your sphere. We're fortunate in that I was able to start with, the community we're in sub two. And then, from there, you're kind of constantly building a credibility packet. So what is that credibility? Like, if you've never done a deal, you have to leverage someone, right? So like maybe you go find a partner and you leverage their credibility. But like, we're at a point now where I'm actually doing it. I am adamant about the fact that I'm doing my friends and family a disservice in not creating content to let them know what I'm doing in real estate. And it's funny because as a business owner, I just don't have time to. But like, if everyone I know is getting shitty returns sitting in their 401k or whatever, and I'm paying people 12%, annualized returns secured by really good real estate deals, then I'm legitimately doing my friends and family a disservice, not giving them an opportunity to make some, 5x what they're currently making. So it's I think it's a phased approach. Where you start is warm market. Where you grow to is you have to be visible. If you're gonna do this full time as a business, you have to hit the point where like you're doing a case study or something on every deal you do, so the world can see what's happening, and then you present it in a way that they come to you. So I present it in a way that like, oh, our private, we bought this with a private money lender, and our private money lender made this on it. So then the people who are meant to pick up on it are going to pick up on it, and they're going to come to me and be like, hey, I saw you were talking about private money and real estate. What's that look like? And then I send them my packet. I have a 39-page credibility packet. So what do? I'm constantly filtering, right? Just the same as you're filtering with sellers. Like, I'm not going to take just anyone's money. So like, I'm filtering by like, hey, here's an educational packet. It'll tell you a little bit about us, about what lending looks like, how you're protected, where you can access capital you didn't know you had, all these things. And I give you a homework assignment. And then I say, give me a call back in a week or two. Let's jump on and see if you have any questions. And if they don't, I'm not going to chase them. Because what am I going to do? I'm going to keep doing more deals, and I'm going to keep talking about those deals, and more people are going to come to me, and the right ones that I'm meant to work with, I'm going to work with.
Yeah, that makes perfect sense. And I think that's honestly the healthiest way to go about it.
Yeah.
Well, cool.
One of the questions that I had, sorry, Keith, if I could jump in.
Yeah,
so I love the idea of, the lists that you develop for, prospective home sellers. How do you go about developing those lists? Are you using certain programs, or do you have it just categorized based on your inbound leads? How do you develop your lists?
To market to sellers.
Yes.
Yeah. So originally, I mean, a lot of data is public data.
Mm.
Most people will pay a third party aggregator. The easiest way, I mean, not the easiest way. If it were the easiest way, is what everyone would be doing. But like, go down near like your county assessor's office, and you can get the foreclosure, the list pending lists and the foreclosures, and not all data is readily available. But then there's third party aggregators that we pay, and the data is generally decent, but maybe just not as fresh. So like, where are you losing out for convenience? Being first to market. So like,
First.
there's two types of marketing, right? There's first to market, which is obviously gives you a leg up, or there's just kind of like bulk. Most people start with bulk. Um, I started with bulk, and then I learned more, and then I went niche first to market, and then I learned more, and then I went inbound, and then so it's like, you know, all of them work. It's just a matter of what's it going to cost me, how long is the cash, is it going to take to get a deal out of it?
Interesting. And then my follow up question to that is because there must be other individuals like you that are hawking for these opportunities. How fierce is that competition? Do you sense that when you're looking at a property and when you're communicating with realtors or potential sellers that there's other conversations being had with other interested parties in these properties?
There's always going to be competition, and like I said before, life happens, and there's not enough qualified investors to solve all the problems that our homeowners are facing and are about to face, um, you know as we move forward. So it's,
Mm.
um, yeah, I mean, I don't think about it. I know that we run a really tight ship, and I'll say it's easy to stand out in a sea of mediocrity because we also buy from wholesalers, and I see the kind of deals that come across our plate, and there's a lot of shit out there.
Mm.
um, so I know it's, like I said, it's easy to stand out in a sea of mediocrity.
Interesting.
I don't see a lot of Yes, the competition exists, but is it really competition? No, I'm just going to wait for them to lock things up too high and fall apart, because we're going to have real conversation with the seller, and we're going to give them the number that works. And then they're going to come back to us when exactly what we told them was going to happen. If they go with the guy offering this price, we're like, the deal doesn't work at that price. Here's why. And they go do
Interesting.
it. And then it just gives us more credibility. They're like,
Mm.
Dave, you're right. It didn't
These
work.
guys are actually doing their homework. These guys are actually, looking into it instead of just looking for the quick flip. I
Yeah,
see that.
the best ammo we can have is full transparency.
Cool. Go ahead, Keith. Sorry, I didn't mean to go on a tangent there, but I had those were some of the questions I was thinking about.
All good, man. All good. Keep them coming. Yeah, one of the other questions I had noted down was, you mentioned like a 12% annualized return for private money lenders. What are some other examples of, this goes for both private money lenders and private money partners? What are some other examples? I think you mentioned like equity positions and stuff like that. Maybe if you could give us like one of the cooler, I guess, examples of like, how, someone who is bringing the money to the table in the deal is getting compensated for it.
Yeah, I mean, it's anything from percentage profit, percentage equity, um, flat return, simple interest, um, annualized interest, sometimes points. I do have a lender that charges me a point on the front end, so they're guaranteed that point, and then an annualized interest rate. Um, yeah, I mean, nothing fancy. That's kind of it.
Cool, cool, perfect. And another good follow up to that is, how can they make sure that they are protected? I mean, we're talking about real estate, so I'm assuming they're going to have sometimes first position, more often probably second position, liens. But is that kind of the gist of it, or are there other ways for them to be protected? I guess equity positions is another way. But
So biggest protection is them, actually learning how to underwrite. Don't trust me for anything. Like, learn how to underwrite yourself. take a look at the deal, pick it apart, ask me questions, make me prove to you why I love this deal and how your money is protected. Um, Other than that, you're obviously, as a lender, you're going to be in a lien holder. You're going to, we're going to get title insurance. You're going to get a mortgage and a deed of trust. You're going to be a lost payee on the insurance. So, like, from a technical standpoint, like, if you lend, that's how you're protected. But like, I always tell people, I'm like, don't trust me. Go look at the deal. Go pick it apart. Do your own research. Call a realtor. Call a management company. Go, whatever. Um, do your homework. Be educated.
Do you have any private money lenders or partners that don't do any underwrite? Or I guess I could see that once they've already done one or more successful deals with you, they probably don't maybe do that as much. But have you ever had any that didn't know much about real estate to begin with, and they're like, "Dave, I want to invest with you because you're killing it." Has
Yeah,
that happened?
no, we've had that, and we tend to shy away from those type of lenders. Again, right? Like, at this point, I have a business to run, so like, as much as I would love to take your money, I also, if it's going to be more trouble than it's worth, like, it's tough, right? Because you want to build relationships, and so you're like, hey, what can I do to go above and beyond and to build this relationship? And like, if this person will give me a low interest rate in exchange for they want to learn, then like, okay, I would sign up for that. Like, if you give me affordable money and the value to you isn't really the return, you're making on your capital, it's more the fact that I'm walking you through the deal, I'm educating you, so like someday you could go do deals on your own, like that. I'm happy to make that exchange. But I lost the plot. What was the question?
I think where you're going with that is, it's you don't want it's more trouble than it's worth if it's someone who doesn't have as much experience.
Yeah, we oh, so about people not underwriting anymore. So I will say, our more experienced lenders who we've, at this point returned six figures multiple times to them. Um, I don't think they really underwrite. They're kind of like at a point now, they're just like, Dave, just keep my money working. And I appreciate them for that. And that's why some of them I pay a little bit higher rate, because the ease of working with them. So there's always trade-offs, right? It's always a balancing act. Like, I might pay a little more for convenience. I might pay a little more for someone who's willing to sit in second position instead of having to be in first position. Um, it's yeah, no two deals are the same.
Makes perfect sense. Cool. Any other questions that you've got for him, Ben?
No, I didn't. This was obviously eye opening to me. It's not a vertical that I'm super familiar with, but David, I do feel like I was educated on this call today, and I feel like it was fun to get a glimpse into your world. You've obviously done your homework and are onto some really exciting things. So, just really grateful that you came on and shared your knowledge and your experience with us.
My before you jump in on that, Dave, my last question was going to be, how can regular Joes like Ben and I invest with experienced operators like you? But after that last response, I'm like, oh man, we don't qualify.
No, no, but so I, my goal is constantly building relationships with people that want to invest, and so um, there's all shapes and sizes of deals. So like, when someone has a lower dollar amount, which is the majority of people I talk to, if they're willing to be in second position, then there's 100% an opportunity. Uh, but what I would say is, again, like how do I build a relationship? Like, hey, we're chatting here, we're getting to know each other. You're
Yeah.
seeing a little bit about what I'm doing. What do I do next? Like, I'll send you guys my credibility packet. It'll answer any questions that you didn't even know you had, because it's 39 pages and it's got a lot of information. Um, and then come back to me, and then let's have another conversation. And like, some these things, they don't just happen overnight. They take time. But like,
Mm.
the fact that like someone's interested, I'm like, awesome. Let's build that relationship. Let's see if there's a way to grow together, and maybe make some money together. Maybe not. Who knows? But I'm good either way.
Awesome, awesome. Well, Ben, if you any last questions before we let
No,
Dave go?
that was great. That was great.
Well, this was so fun, guys. For everyone watching right now, Dave did not have to do this at all. We
I
really
didn't even
don't.
know we were talking about.
Yeah, and I gave him very little, actually almost zero background really. And Dave and I, as you can tell, like we haven't really spoken much before we hopped onto this, so he really, really didn't have to do this. So show some love in the hit the like button, leave some comments, and um, if anyone is willing to part with some of their money and make some good returns and be hassle free, hopefully we can build some more relationships and we can kind of give Dave some more value that way. But yeah, thanks again so much, Dave, for hopping on, and hopefully I'll talk to you again soon.
Yeah, you guys are awesome. Thanks so much for doing this. I appreciate this, and thanks for inviting me. Um,
Thanks, David.
yeah.
For sure, man. And if you want to, we'll get this posted up on YouTube. And if you want to share this with anybody to kind of, this could be part of the credibility package, maybe for some folks who are maybe a little bit more green in the space. And then one last quick thing: is there any way that anyone can get in touch with you, and maybe an Instagram or a Facebook handle that we can give?
I put everyone to my Instagram. It's just at Medium Wave Dave. It's
At medium wave, Dave.
yeah.
Okay.
Yeah, come into the DMs, and you'll see my uncensored world. I post mostly real estate or realtor stuff there. I don't post as much my investing world, but yeah,
Cool.
drop in the DMs.
Awesome.
Let's chat.
Let's do it. Thanks, David.
Awesome.
Cool. Thank you guys.
Thanks, Dave. Take care. Thank you again.